I apologize for having all my guitars on display there. Sorry.
I'm just surprised it's not a lineup of snowboards. That's all.
Oh, and you see, we're learning to box you in. We got to ask the
Uh-huh.
correct questions.
So raise your hand if you see somebody you don't know yet. I'm always curious about this. See, that's so cool. This is really neat. I love that. Great. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's roundtable, I'm going to be sitting down with several titans in this space, great friends of mine, people that I rely on and that I talk to as we walk through our own personal infinite banking journey and as we're helping clients all across the country, and I hope that you enjoy. Awesome. So because I already asked everybody whether or not there was somebody else on screen that you didn't know yet, let's go ahead and do a bit of introducing, because a lot of viewers, right, might be seeing some folks for the first time as well. So what I would tell everybody is go watch the first introductory interview that I have with everybody that's on screen, because everybody that is on screen has been on the channel, has had conversations with me that we've put out to the wide public. So I would always encourage everybody that's watching this for the first time, go watch who these people are, get their background stories. But for the sake of the group here today, I know that this is our first time having JDew jump on the roundtable. So JDew, why don't you give, a 30-second, a minute, whatever you want to, but a background for yourself.
Sure. I live in Greenville, South Carolina, friends and family out there. And I've been in this IBC journey on a personal level for the same amount of time as Jesse. He and I got started in the same kind of a breath in 2016. And since then, my brother and I, Jonah, he and I came up with the Banking Bros and the Cash Compound kind of monikers to help code cracking cash flow become a part of a lot more people's story. So that is a little bit about me. 4 kids, ranging from 11 to 3, lots of policies. Right now, working through mom got denied. She is a dependent spouse in the military. And so she and stepdad are getting shipped overseas summer of 2025. So we're putting up a case and fighting the insurance company to get mom a policy as well. So that's my personal story of the summer part of it, and the next step and phase of expanding our systems over here. But we've been helping people for about that amount of time, 7 to 8 years within our journey of the IBC process for our own lives. So happy to be here on the channel this morning. Looking forward to recording with you guys and getting into some good debate topics and making fun of Jesse with snide comments and remarks as much as I can sneak in.
I knew it, and I was going to give a little follow-up intro right there, but it looks like Joe already has a question. Of course, already hand raised.
Yeah, I don't know if you mind sharing two things. You mentioned you're fighting the insurance company. What does that actually entail? What does that look like? What does that mean?
See, I knew I shouldn't have let you talk yet. Let me wrap up a bit of an intro. So I think JDew just gave us a topic as well. I would like to just go ahead and pursue that, just since he offered it as well. One more quick thing that I would say is I feel like JDew, Jonah, they don't necessarily need any introduction in the infinite banking space. But again, I think it's cool, and a lot of y'all heard me in my one-on-one conversations with each of you, Tom, Kate, y'all. I've talked about my relationship with JDew and how it's been really cool all along in the background personally, that as we were exposed to infinite banking, we've been able to text or call, or when we would see each other, we would ask, hey, have you read this book? Have you seen this person's podcast? Did you show up at that event? And all that kind of stuff. And I just feel that having, here I'll use a term, JDew, a running buddy, so to speak, in the infinite banking space, it really does help speed up your learning curve and provide you some camaraderie. And then I feel like, of course, having a round table here just takes it to a whole new level. So at least one more introduction, just because. No, do we have to? Tricia, this is your second time being on our round table. Tom's been on multiple times. Joe's been on multiple times. Okay, just trying to get my recollection correct here. But it is our first time having Bill and Kate at a round table. Again, everybody should check out their introduction video. But good morning to you guys, and then would y'all please give a brief introduction?
Hi, I'm Kate Breen. I've been doing IBC only since I was introduced to it and got my own policy just about 3 years ago, actually. And very lucky because now we finally expanded our system and got a few more policies going. And it's just been a great learning experience, and you just want to continue to share it and wish you could just pull everybody in and just shake them and make them see how great this is. But that's the diversity. That's the way life is. But it's been quite a journey, and I'm very excited to continue and keep learning. And I'm just about done with my practitioner program, so hopefully soon.
Bill Curtis, I know everyone here. I met you before. I've been a practitioner probably 5 years now. I started in with another group. They were all about getting out of debt. So that was like 10 years ago. Of course, they gave us the Infinite Banking Practitioner book, Become Your Own Banker book. I read it like everyone else, kind of didn't understand most of it, but it made sense. And then I got into trying to get people out of debt and eventually reading the book a second and third and fourth and fifth time. And every time you read it, you start to understand a little bit more and you get to where you're at, and every answer, I always tell them, everything you need to know is in that book, because he traveled the path that we're on. When I say he, I mean Nelson. He traveled that path. He had the same frustrations of people that knew what they knew, and they didn't need to hear from Nelson how their life could be better. And I mean, to me, look, we all want to earn a living and make a commission. But the most frustrating thing to me is that there's people out there that you can help, whether it's get out of debt or make their business easier, whatever it is, and they just won't walk through the door. We talked about it yesterday. That door, walk through that door and your life will change. And 95% of the people will not open the door. I was talking to Dan about this yesterday because he's a new practitioner, and he calls from time to time, how does a new practitioner get started when they're out there on an umbilical cord by himself with nobody, and that it's frustrating. But I know Joe spoke to him, and he mentioned you, Jesse, and he mentioned somebody else, I forget who it was, who told him about the human factors, because he was telling me about the 1090 and how it looks great and everything. I said, yeah, but the second year when they tell you, hey, what's the least I can pay and still make this happen, and you experience it. So that's it. I wish I could help more people, but they got to do their own push-ups, unfortunately.
Both those things are true at the same time. We're all here looking to get better and reach more people and let them into our conversations where we can cover any of these topics, 3 of which I've already written down. So thank y'all. Just in your introductions, you're giving us topics that we can go to. So if I recapped those to you, and again, thanks everybody for being here. Fighting the insurance company. I'm going to kick it back over to Joe because Joe had questions, but I went ahead and wrote that one down. Yeah, you did. Here's what I'm thankful for. JDew already opened us up to, just full attack mode on Jesse, but then Bill and Kate show up and they've got a little friendly banter, so that might save me a little bit. Shaking people. That was the second thing that I wrote down. This feeling that we want it for people, maybe more than they want it for themselves. And then Bill, you were double tapping that. And then debt. Debt's always a relevant topic, and a lot of people associate infinite banking with debt. So those are the three topics that I have. But back to you, Joe. Now that we're past the introductions, you had questions. Let's go.
Um, before we jump back into back into that, I just kind of wanted to comment on your comment about a running buddy with JDew. And in Becoming Your Own Banker, page 65, he talks about organizing a wealth club or joining a wealth club. And I think that also fits what Bill was saying. This young practitioner, new to being in this footprint, uh, finds himself on an island and should really consider getting around as many people as he can that understand this. Just that wealth club should reinforce Nelson's principles, because if you don't reinforce those principles, the worldly principles will take its place. The marketing machine that's already built will take its place. You will fall victim to the behavioral problems he outlines, the human behavior that he outlines in that book. The question I was saying before so rudely interrupted for JDew, he had mentioned fighting the insurance company. And I was just wondering if we could expound on that. What does that look like for people that may not be agents? What would the agent be doing in that situation to fight on their behalf? And the follow-up question separately, I guess more broadly, he's talking about expanding his system. He said he has lots of policies and kids. I don't know if juvenile policies was on your docket, Jesse, but thinking through what does that look like? How should one think through the type of insurance to buy for and on their children? That's all I got.
All right, JD, let's go.
Yeah, let's go get into it. So first off, we as agents, folks who are advisors to people, we're the go-between the insurance company who carries the risk, right? In the world of what we do, you hear the word carrier a lot. And, I know Bill has worked with companies that have like, hey, we have 50 carriers we work for and work with and work alongside, right? So carrier is a word that we use for the people who are going to have the risk. That's the insurance company. And we're the agent, right? So we're the Jakes of State Farm, right? State Farm carries the risk. We get to be the Jakes. We get to be the Flo at Pro or Jake at State, right? So I'm talking about that all the time to people, like you said, Joe, who are kind of new and they don't really understand what we're going to do for them. Maybe they've read a book or they've seen some content of Jesse's or mine, and they're like, where do you come into play? And I go, oh, you remember those commercials on TV? Now, if it's a black person, I say Jake at State. If it's a white person, I say Flo at Pro, because I guess white people get their insurance from Flo at Pro and black people get Jake at State. Whatever I can do to make it simple for people to understand where I'm coming from. I'm not the guy who's going to overcomplicate the numbers. So I throw in a little personality in what I do. So we're the ones who are making now, here's the big word, case. We're making a case for the insurance company to carry the risk. So it's our job to fill out the paperwork. I'm assuming that 150 years ago, if you were an agent making a case for client Jesse, who wants a policy, you could have written all of this stuff up without an application that was formal. Maybe they didn't have formal applications in 1910. Maybe what I did is I wrote 50 pages of an essay and I presented it to the insurance company and said, here's everything I can possibly know about Jesse. So I'm making a case for the insurance company to take on the risk, right? So that's what now, of course, we have formal stuff that we have to fill out, and the insurance company will not decide to take on the risk unless we fill it out their way. But I'm assuming 150 years ago, I say, Jesse's a farmer. He lives on Durham land. Here's the 50 things I know about him. Like, I think it's a good prospect for the company to go in on this risk with Jesse, with me getting a commission from it. And we're all three of us, whichever the three parties, the client, the agent, and the company, right? The carrier. So now let's fast forward. The reason I say all that is not because like I know it to be a fact that it worked out like that. That's not the point. The point is that I'm trying to relate what I'm trying to teach people and help them understand to stuff they already get. And they go, oh, well, that makes sense. The insurance company's got to pay out a big check as soon as Jesse pays a premium. So I'm making a case that they should take on the risk because I'm trying to tell them, I don't think Jesse's going to die anytime soon. I'm telling you, it's a good dude. He's going to live a while. Okay. You should see this man's physical strength. Okay. This is a hoss. All right. So fast forward to my particular situation. The risk turned out to be from the insurance carrier that we're going alongside here, that me and my brother both are putting up a case for my mother, our own mother, to have life insurance. We'd like to own it. And that in the other half of the question, expanding my system. But they said, we don't like the risk. And we're now going to go, no, 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 you're going to love this risk. She's been watching all of she's been eating holistically, and she's got that little trampoline thing in the living room. She's been jumping on it. It's going to be great.
Yeah.
She does not fight wars. She supports her husband, who also doesn't fight wars. He's a chaplain, and they're getting shipped over on military soil to a new location for their orders in Germany. No risk, no risk at all. We don't expect this person to die. So that's what we're doing. So we have the opportunity, for those of you who don't know or are new to this, or those of you who are wondering about your health, habits, and history. Everything around me is alliterated, by the way. I grew up Baptist. So like that's how you remember things. It rhymes or it's alliterated. Banking bros. Okay. Your health habits and history. No, no, no. Health habits and history. Mom is good. Let's do a cover letter. Let's give you some more background information. Look, I'll submit some stuff that her doctor gave her 6 months ago. We'll add that to the case. So I'm making a case like a lawyer, the go-between, and saying, you should take on the risk. So that's what we mean by fighting the insurance company. These are good people. They're underwriters. They're looking at a lot of AI models. They're looking at a lot of 10,000 lives models. They're looking at a lot of things that the computer tells them. And I'm like, no, no, no. Let's talk. Let's talk. This is a good deal for the insurance company. So don't be looking at no computers here. She's going to last a long time. But when she goes one day, I'm going to have two problems. Number one, I'm going to be crying so hard. And number two, I got to take these dang kids to the funeral. So I need some money. So let me own a policy on mom. That's what I'm talking about. That's that part. Okay. So how do I do with that, Joe? Does that make sense to everybody? Everybody agree? Is that an okay way? That's how I explain things. So I don't know how you guys do it, probably formally, probably a lot better than me, but I got to talk it through the way I think, right? And I think that there are a lot of people who grew up in my environments, whatever they are, or they grew up looking like me, or they grew up watching the TV that I watched, that like, we need to dumb this down. Like, this is not what we're trying to pull off here is guaranteed growth and cash flow. Like, I don't need to make it more complicated than that. If we can start there, we can build on however complicated you want it to be. As we're practicing the infinite banking concept, we need to start talking about numbers. But at the basis level, we're talking about risk and life insurance. Like, that's not hard. Come on, we know this stuff. Okay, we got to get to the funeral, and I got to be able to take time off. So I need you guys to prepare me a check and send it. That's what I need from you guys. Can you guys guarantee that? Okay, cool. The second part is expanding the system right now. We have 4 kids. So when I started this journey, me plus 1, of course, and then 2 kids. All right. So I got a policy on me around the same time Jesse started, which is 9 years ago. But we pay premiums in year 0, right? So, but 9+ years ago, 2016. And then by fall 2017, I had 4 policies. So the missus and 2 kids at this point have policies. So there's 4 in our system. So now everybody, at least when we go, there's going to be a check coming toward the DeFazio family. All right. We bought money from the insurance company that will come to us. Guaranteed. This is whole life insurance, capital W, right? 5 letters. And so that means something. The cash is coming in death, and the cash is flowing in life because of the equity in cash value. So now at least everybody's covered. We got the death part covered. Now, hopefully for my children, those deaths are going to occur well after I'm gone. Well after I'm gone, right? 100 years from now. I don't know what the scientists are saying at this point. I make up stuff all the time too, and I guess Twitter and Instagram is making up. The scientists say my kids will live 100 years. Great. I'm not trying to live 50 more years. I'm done. My knees hurt. Okay. So what I'm trying to do with these types of policies, of course, is leverage that equity number by calling the insurance company and saying, show me the money. We remember Jerry Maguire, right? So if I call the insurance company and I ask for money, they said, oh yeah, you bought money from us, but you're not dead. I said, right. So I need to get the equity. I'm not dead. So I need you to turn that equity into cash in my account. And they say, well, you can take a check if you want. I was like, I don't trust the mailman. Just put it cash in my account. Okay. So that's what I'm trying to do. So expanding the system means that what I'm going to do as more kids are added, there are now 4 kids, is we're going to put more of our money in a place, premium, that buys their money. My money, when it comes in $1, $2 at a time. But if I take that money and give it to the State Farms of the world, I know none of us probably are utilizing that company, but they have a lot of commercials and everybody knows they're a long-standing company. So I use them as, so people just understand. Oh, yeah, I know State Farm. I got my umbrella and my car insurance. Oh, is it right? We give them a little check. They promise us a big check. They give us peace of mind, paperwork, pool of cash, positive vibes, policy, paperwork. They give us a bunch of P words. And I was like, oh, yeah, that's what they give us. Great. So I'm going to write them a little check. So they write our family big checks and give us, we can sleep well at night. So we've expanded that system over the years. I've extended policies on myself, me plus one. We now have 2 policies each on us. The kids all have 1 at this point, and we've just stored more of our dollars in the insurance company's hand because they keep promising way more dollars for our family in death and in life. So that's what we've done so far. So I'm trying to do the same thing for mom because I realized, mom's going to go sooner or later. And if the insurance company don't send me a check, my brother says he's not even going to go to the funeral. He's like, I can't be taking these kids places. So the only way I'm going to mom's funeral is if the insurance company sends me a check to go. And I'm like, dang, I told that to my mom. I was like, Mom, you got to watch your youngest son here because I'll still show up. I don't know if I can bring the kids, but like, we got to get some policies on you. So there's my answer. That's how I think of things. And hopefully that's at least a good mental thought for some of you in the long form answer of what I was talking about.
I know Joe will have a follow up. What I'll say is, this past week I had a conversation with somebody as I'm walking them through getting policies on 3 children. One's already been approved, but 2 needed more follow ups, right? And I'm doing that in between role, like you were describing, JDew, of, oh, well, the insurance company has this question now. So I need to make sure to connect the client's doctor's office, to the insurance company so they can get that form. And then, of course, I got to send a release form, a medical release form to the client. And this is interesting to me. And it's, maybe even somewhat telling on me that I can always be communicating better. But I'm getting this question, well, hey, am I signing this form because that's going to get my children approved? And I have to restate, well, no, this is just giving them permission to get access to more information for us to make this case that we also would like them to give you a policy, right? But these are steps that we have to navigate through to help folks in making the case. So it's a very real scenario question process in our own personal lives as we're building systems and such, but also helping clients. Anybody else?
I just want to, just a quick thing. I appreciate that, JDew, because a couple of things what I took from your story is, it's funny because I ran across somebody who is at a former Goldman Sachs guy, and started talking to him, explaining some of the concepts. And from people in that world, you think that high finance, they say, oh, insurance is so complicated and complex. And so when I step back from that and I say, okay, well, we do need to dumb it down and simplify things, right? You can easily get caught in fancy words or words people don't even understand, like PUA or whatever. And people get nervous behind it. And there's a broad perception around that, that the insurance space is so scary and complicated. So I need to stay away, right? Because I'm going to get duped, right? In some fashion. And I really have heard that more and more recently, and it really struck me. And I think that's a broader thing within the financial industry that is pervasive. And it's something like I got to stop saying these words that people have no idea what they mean. And it's really important because that's gets to the human connection to people, right? And that's what they crave. They don't, information's all out there, right? And I take that to heart. Like people need people to help them think through things, not tell them what to do and throw fancy words at them, right? And I really think that's something that is a more apparent these days than I'm trying to teach my kids how to relate to people. So it really struck me.
Let me ask you a question and we'll go deeper here if that's okay with you, Tom. Is it possible for prospective clients to be duped? I'm just using your words and kicking it back to you in a question. Is that a possibility for the public at large to be duped when it comes to insurance? And what might that look like?
Yeah, I mean, the reality is this is that you don't have to go too far when you start seeing half truths out there. And this is what I think we espouse, and certainly in IBC in our own worlds, is people got to take ownership of their own lives and their financial lives, right? You can trust and have partners, but ultimately people have to think for themselves. And we know that's not an easy thing, right? Because that takes courage, it takes some energy, and people can get duped. And so, when I talk to people around these things, I said, yeah, you can trust me, but ultimately they have to own their lives and their financial lives for sure, right? And so it can happen. If people just go blindly into it, shaking their heads, they're liable to get duped, right? If you're hanging out with the wrong person. And unfortunately, some people are not as scrupulous as we might be,
Now,
right?
if I can jump in with that, I agree with that on Tom's side. And Jesse, to continue your question, I think in life insurance, there's lots of insurance. There's lots of things in the financial world that are complicated or hard to understand. But in life insurance, entire companies and industries that have made it all the way to Fortune 500 have been built on the fact that no, you get duped in life insurance if you don't know how to do it well. So that's the whole A.L. Williams and Primerica model is built on that idea. Universal life insurance duped people for a generation. It duped people for about, I'm not exactly sure, 10 years, 20 years, something like that. And whole life insurance gets thrown into that model all the time. And they built an entire mega company off of that. And most people understand some form of marketing phrase like buy term, invest the difference, buy term, invest the rest because of what you're saying out there. I think so. These are very important things for us to understand. And Kim Butler, many of us know her, and the truth concepts model that exists in our world, on the inside baseball world. They love to mention this. I've learned this, and I tried to adopt this phraseology from Kim, is traditional financial planning and typical financial planning. And she believes, and I now am ascribing to her theory, we deal with traditional financial planning. And typical financial planning has gone over the course of the 20th century into the 21st century around stock market, around investments, around Wall Street, where that is actually very typical, but not traditional. And traditional is being able to keep and save and put your money in places rather than go straight from income to investment where you do not control and could lose the money. And so those types of models and insurance companies partnering with Wall Street to do universal life model construction of policies, yeah, duped, complicated, can lapse on you and go away when you need it. So I agree with the
Oh,
idea.
thank you.
Yeah, you can be
And
duped in insurance.
yeah, I agree with that, because we just, in fact, had something. People they don't read really either at all. So it's like what you were just saying, JDew, about the universal life. They make this, I don't know why people are so ready to, when they hear people talk about universal life and make presentations, that, oh my gosh, this is the best thing. They see and hear nothing else but the big numbers and what they want. And they think that it's just going to magically happen. And once, Bill and I were talking about it yesterday, if they fund it, they max fund it, it could work for them. However, most people don't stay on that trajectory. They want to know, what is the least I can put in to keep it going. And once they start putting the least in, it's really hard to start putting more back in again. For most people, I'm not going to say everybody, but for most people, you get comfortable, you get this, and then they wonder why it's not going to work. He had somebody actually text him about that, a longtime client, and wants to know, why that wouldn't be a good idea for him, the IUL, and to show him the proof. And so Bill, because professional he is, went through the entire thing, highlighted everything. But apparently this guy didn't read any of it, because it's just all there in black and white. So then we get lumped into the same category as being duped by the universal life, because now it's insurance and it's life insurance, and it's, bad, because they didn't follow what they should have done, which is their own research. They should have done, like Bill likes to say, their own push-ups. They don't check out what it is they're getting involved in. So it just really is disheartening in that respect. But yeah, it's whole life insurance is just a whole different animal, and it's the best thing I ever came across. And I used to think you had to be wealthy to do it. And it's not that you have to be wealthy. You just have to
Rethink your thinking.
rethink your thinking and just gain knowledge. So there's wealth in knowledge. So that's where your wealth should come from, is learn about what it is you're actually doing and getting into. That's it.
Can I just add to that, like this whole idea of being duped? I can't tell you how many times I have heard people say, yes, I read Nelson's book, and then I tried to do it myself. So I went to my local agent, and I've got some whole life policies. Would you take a look at them? And then when we take a look at them, they're not actually whole life. They're variable universal or indexed universal life. And Nelson had clearly said in his book, that is not the type of policy you want to use for this, because we want those guarantees, right? I mean, and that's going back to what JDew was saying too, like, that's what's really traditional. That's what stood the test of time for hundreds of, at least over 100 years, has been the guarantees, the very traditional, the not fail kind of policy. So just, I think, to put it out there for the audience, I think a couple things is important to remember is that when you contact, an authorized Nelson Nash practitioner, you can have a little bit more assurance that you're going to get the right kind of policy, and you really want that to be that mutual dividend paying whole life insurance policy that is specially structured for infinite banking. Because if you don't have that, you're not going to have the guarantees that it's going to be there for you in the future, and you're going to have access to cash flow and a discounted dollar for the death benefit.
Slow and steady.
That's right.
Trish, you said, I'm sure you'll remember, we were in Colombia. You coined the phrase. I stole Joe's phrase too, about cash flow, but I use yours. We graduate from the Nelson Nash Institute, and we have PhDs. And we think we're going to go teach a college graduate, that's going for his PhD. But actually, we get put in a 6th grade class. And everything we know, we can't tell them because it is so far beyond what they understand. And I believe 95% of the people don't read, don't educate themselves, don't do their push-ups, and they want somebody to, I forget who always says it, you got to drag them in, you got to drag them around. And the hardest thing, I shouldn't say the hardest thing, the most important thing for me to learn, that even though infinite banking will work for everybody, it's not for everybody. It's not for that guy that's not going to open the door and step through it on his own, not me pushing him through it. And
Right.
unfortunately, there's very few people. A financial advisor told me one time, I was at church, and he made the statement. He said, Bill, if there were 100 people online coming up to talk to us, 97 of them would be coming to talk to me, and only 3 would talk to you. And what you have is better than what I have. And you know, it's just the way it is, as from my perspective. But
Well,
yeah,
and I think that that idea of the PhD and the sixth grader is really just trying to keep it simple,
simple.
keep it concepts, right, to be learned. But I'll tell you, when you do get somebody who's eager to learn, they can quickly ramp up to their own PhD level. So just on the positive side of things, when you do get someone who's really ready to, they've read the book and they're excited about it, they're not afraid to do those push-ups, as you say, then man, that's prime candidate right here.
I would say that having a running buddy, like we've kind of gone back and forth and mentioned a couple of times now, having a running buddy can do a lot, Tricia, to help us achieve a higher level of understanding, but also in the professional space, because I know that there are agents as well, agents that focus on infinite banking that listen to the channel here. They'll be listening to this conversation. That's where having a running buddy like a JDew or our friend Bruce Wayner, somebody in your life that as a professional will tell you as a professional, well, remember, we've got the curse of knowledge. I mean, I've heard that many times from JDew, and that's a good reminder for us that, well, while we're running buddies and we're always talking about taking this to the next level because we're looking at trying to get a policy on mom and kids and we're doing this and doing that. But then on the professional side of things, somebody who can say, hey, let's go back to the fundamentals. If we're sharing insights into, hey, I'm working with this client or I'm working with this prospect on this, it's nice to have a running buddy who can say something there to maybe help us even tone down our approach. So I hope that makes sense to y'all, but that's something that sticks out to me. But ultimately, I like what Tom said when he talked about, and Jesus put it this way. He said, the poor you will have with you always, which would just underscore human behavior, right? It just is what it is. But Tom said something earlier that I feel is a great way of describing it, which is energy. He used the word energy. People that are willing to put energy into pursuing something better for themselves. Joe, go ahead.
I think if you can you be duped? I think if you go back to first deciding for you personally, what is banking, the process of banking. I think that helps frame up this idea because the insurance contract is the contract. You're signing the contract, right? You're deciding and signing the contract and agreeing to the terms of the contract. They're not swapping out page 7 from this contract over here and changing it on you. The contract is the contract. You signed it. So then to be duped, it means you need to be believing something is what it isn't, or is something that it isn't, right? I think that goes back to the first part where defining what banking is for you will help you navigate what to purchase. Because Nelson teaches in his book that you can bank with just about anything. He gives a great example of the CD sisters. And he shows the pros and cons of using something like CDs or a money market, maybe nowadays might be a little more common, where you can collateralize that. You can collateralize equity in a house. You can collateralize several things. There is a loan provision in universal policies that you can take loans and repay. And the problem with all of those is the collateral is not guaranteed to increase. I think either it was Kate or Tricia talking about the guarantees. The floor is always rising. That's why Nelson said this is the most appropriate thing for this type of banking activity that you're going to do your entire life because you're spending your entire life, and all spending is finance. Ergo, you need a banking system for your entire life. If we think through that, we understand why he said long term. Think long term, 3 to 7 generations in the future. Next principle is capitalize. Don't be afraid to capitalize. I say that as you want to capitalize for as much and as long as humanly possible. Your policies should afford you the right to pay as much premium for as long as you possibly can. And then you get to decide, like JDew has several policies going on, several people involved. Maybe a kid steps in at a future date to pay the premium on your policy, kind of like JDew and his brother are doing for their mother. Like that, you put it in place, you paid the premium for 20, 30, 40 years, and now you're done. And now Junior steps in and says, okay, I'm going to pay from here on out. Realizing every dollar paid, every dollar in premium paid will be returned in a multiple. Inevitably, we're all going to pass. We're all going to graduate. We're all going to die. This type of insurance, it's not based on the probability of an event happening. It's based on the certainty of it happening. It's different than every other type of insurance. There's really only 2 types. Based on certainty and based on some probability of some event, some peril happening. Nelson would say this is it's a misnomer.
And yet we're quicker to pay insurance on the event that might happen or might not happen.
Oh my gosh.
All day long, right? Car accidents, your home, whatever, flood insurance, things like that. But life insurance is the last thing we think about. And yet that's the most certain loss.
And Joe, everything you said, it's a rising tide. But everything else, you lose control. Because life is always going to happen. And taking an equity line, if life happens and all of a sudden you can't make those payments, as James always says, you don't have a problem until you have a problem. And everything else you lose control of. With this, you don't. When I first started, I was taught, because of the mentality of the client, to RPU the policies. Now, I'll show people an RPU, and then I show them the same policy, not RPU'd. And it's always asking them questions. The question to anybody is, hey, if you're 67 years old.
Bill, can I just underline something you said just a second ago?
Yeah.
You mentioned control and how important that is. That's such a great point. I have some friends and colleagues that are in the real estate space and had this whole strategy devised where they're using the equity from one real estate property. They're effectively banking, but they're using real estate. So they're building up a real estate portfolio. They've repaired it and rehabbed it, and now there's equity. So they're trying to use that to buy another one. And they're doing this over and over to expand their portfolio. And then the local regulations that they were banking on changed. I'm sorry. Yeah, the regulations changed first. Then the lender, their favored lender, changed terms. Now the new numbers and the new rules that they have, their model doesn't work anymore. So I just wanted to say, like, just because it works today, I think you said James or Ryan, somebody said it's not a problem until it's a problem.
Mhm.
If you're not in control, the risk is always there.
Mhm.
The rules that you're playing by can be changed against you on a whim.
It's exactly what happened to Nelson, right? That's how
And
this whole thing became discovered.
precisely.
Interest rates went through the roof, and uh-oh, what was great leverage in his real estate suddenly was a disaster.
Yeah. And he spent months and months on his knees in prayer from 3 a.m. to 4 a.m. when this was revealed to him. Sorry, Bill.
Who, ha-
Sorry. Go ahead. Go
who,
ahead.
who hasn't done that? You know, we all think, especially when we're young, we're on a trajectory of greatness, and you're the man. I'm gonna make, no matter what happens, I can always make it happen. And I did. I'm the example. Until the day he wanted to get my attention, because you can't tell the man how to do it differently because the man knows how to do it. Until he turned off every spigot of cash flow and you had nowhere else to go. You know, everyone else says, hey, they pat you on the back. Don't worry, things will get better. You know, so you go to church and you sit there and you pray that something's going to happen. But, you know, this policy, I keep going back. I never met Nelson personally, but I feel like I know him from reading the book and listened to his CDs that I've listened to probably 200 times. Everything we're talking about, everything that we have experienced, everything that we're going to experience, he must have experienced in the 25, 35 years that he did this. People not showing up, the guy that he tried to sell a policy to who didn't want it, so he ended up buying a policy. Nelson bought the policy and loaned him money to buy the plane because he wouldn't do it for himself. You know, so I started to say about RPUing the policies, you know, how quick can I stop paying? And I've learned now to say, look, you know, whatever age, when you're 70 years old, are you going to stop going to Smells Fargo Bank or Skank of America? No, I'm still going to go there. Okay, well, if you're going to go there, why don't you put it in your banking system first? You know, I know we're told, and JDew said this before, on the videos, we got to watch our language. When I'm doing a Zoom with somebody, all bets are off because I speak the language that they understand. In other words, you know, if you ask them, look, if you have, you know, 100,000 in a life insurance policy and you borrow 50, how much can you borrow? They don't know the answer. But say if you have a credit card and you have $100,000 line of credit and you use 50, how much credit do you still have? Oh, I have 50. So I say I get down in the trench with them. I don't try to show them how smart I am because that didn't work. I try to get down where they're at. I guess meet them where they're at, they say, and just talk to them about the things they understand, which JDew was saying. You know, those things they understand. Well, are you going to stop going? No, I'm going to continue going to the bank. And I use James. You go to on the illustration, and you know how I hate illustrations, but they are beneficial because that people look at numbers and they believe those numbers. And I'll show them, go to year 21. It doesn't matter what they're putting in. If they're putting in, let's say, $10,000 in premium, the 21st year, that cash increase is going to be 2, 3, or 4 times. And I love to ask them, can you go to your financial advisor today and ask him, if I give you $10,000 21 years from now, is it going to double, triple, or quadruple? They can't. This will. This is guaranteed. Of course, we know it's not because it's on a non-guaranteed side, but the guarantee really is there. It might even be more. And it's so frustrating to know you have the answer to their problem, and they don't want to hear. And there's nothing you can say. You know, we get calls all the time, and I always like to say, they get to the cliff, they jump off. Then they call, hey, Bill, should I have put on a parachute before I jumped? Why don't you call me before you jumped? I had the parachute. But they all do. This is what I did. Now magically solve my problem. And again, something JDew was talking about, getting his mom a policy. Well, me not planning properly, as Nelson said, the income that you're going to get that you don't plan for all of a sudden came, and I didn't have enough room to put it anywhere. So no problem. I applied with 3 companies: Lafayette, One America, and Emeritus. Well, I almost didn't sign the policy where One America declined me. Emeritus rated me. Who was the other one? Lafayette. They were going to go to reinsurance. I don't even know what happened to that. I ended up having to put it on Kate. And the problem was, they don't care what kind of condition you're in. They don't care how much weight you can lift, how many push-ups you can do, what kind of shape you're in. They cared about, with me, one thing. I made a mistake trying to get life insurance because I did probably the right thing for my life. 2 years ago, 2 guys I know, both of them younger than me, one like 55, the other one about my age. He was 70 at the time, or 69, nearly died. 6 months ago, another guy in my church nearly died, younger than me. These guys aren't fatzos. They thought they were Superman, like I thought I was Superman. Never went to a doctor my whole life. So what did I do? I finally, okay, let me get smart. I'm going to go to the doctor. Now they have information that they didn't have before. And now they tell me, I mean, what's against me is I'm 73 years old. I'm not 43 or 53, or 63, I'm 73. Well, you're great. Your cholesterol's, super low. Your veins, yeah, you have a little bit of plaque, but 10%, 20%, boom, I get declined. Well, I went into that doctor's office, the cardiologist's office. Oh, well, doctor's in a meeting. I don't give a damn who the doctor's with. I need to talk to him. And he was right. What he told me was, first he said, well, who gives a damn what your general practitioner says? I'm the cardiologist. And he said, Bill, everything you're telling me is right. He goes, but they're looking at this paper. And this paper says you have plaque buildup. That's what it says. 10% plaque buildup and 90% plaque buildup is a big difference. But that doesn't say that here. All it says, we're using a general term. That general term got me declined. And my age, being realistic. So they don't look at you. They don't look at anything. I know what Jay was saying about his mom. Hey, great, your mom, but decline. She's going to Europe. It's all about risk. That's it. It's like, you're going to roll that dice. What's the chances that you're going to roll a 7? And that's it. The only thing we have on our side, and I told this to Dan yesterday, he was talking about policies. I said, look, you got to remember one thing. They're businesses. They want to write business, and they want that policy. You got to convince them somehow that it's in their best. They're looking to do it. You got to say something
Like Jay said.
that they'll do it. But again, they're just looking at numbers. No, and they don't care. So
when it comes to the health issue, it's interesting, I guess, just because there are obviously going to be times where that's going to be the case, where you or somebody that you are working with, Bill, is going to be wanting a policy and they're going to be denied, or maybe they're not even denied, but they're table rated, like you said, or you just have these extra steps, like this guy that I was messaging with, and he's saying, oh, I got another form to sign, but this isn't the approval yet. No, this isn't the approval yet. We just got another form that we need to get to more information. And then on the other side of the coin, you even have the instances where, say, somebody hasn't gone to a doctor, but because they're getting insurance, maybe the insurance company even asks, hey, we need an annual physical or something to go off of here. And you'll even have somebody that will do that. And thankfully, for their own health's sake, there will be something found, and then they're encouraged or motivated to do something about that, and then they can work on their diabetes or just whatever it happens to be, right? So it's interesting, just because here we are fielding the conversation as people who personally implement infinite banking, and as people who are professionally helping other people at the same time. So both of those scenarios, are relevant to the subject. Anything else that anybody else wanted to touch so far?
Yeah, I was going to say that it's never fun to get that rating or the decline or any of that. But part of this is understanding that you're getting into the banking business. Through co-generation, you're plugging into an established entity, and you're co-owning it. You're a partner with that. So on one hand, it's never fun, but on the other, you don't want the insurance company to accept all risks.
Right.
You don't want them to accept risks that they can't mitigate, that they don't have enough time to mitigate appropriately. That's a prudent business partner. And that's how the company is run. So it's, like I said, it's never fun. And Bill, I'm sorry that was written the way it was and interpreted the way it was. I'm sure you could fight that. But the fact that there is a boundary is a good thing for the sustainability of the business, the long-term health of the business. They want risks. They want the risks they can effectively mitigate, that they can understand and mitigate. They'll take that all day long. Two, we spent a bit of time talking kind of about whole life specifically, but I always point back to it's a process. That's a product. Banking is a process. And the fact we don't understand that is a problem. If you can't understand the problem or understand your identity in the problem, which character you play in the problem, don't get the product. That's like going all the way back. The duping, it's because you didn't understand the other pieces. You didn't understand what you were signing and agreeing to, because you just went straight to product. You've got to understand the process. You have to understand the problem. You have to understand your role in all this, both as the borrower, really the borrower, the capitalizer, and the owner. Everyone forgets about the owner. And that's kind of hinting toward what I just said. If you're co-owning a company, you don't want your company taking on bad risk or risk it can't handle. Not saying bad risk that you can't mitigate. You're ill-equipped to mitigate. You want it making prudent business decisions. That's what they're there for.
That was an absolute pleasure for me to host so many of my friends at the round table today. If you would like us to cover a particular topic in the future, put that down in the comment section below. Everyone's contact information will be in the show notes. And my wish is always that you will live and leave a lasting legacy. You can find me at durhamtalents.com. Have a great day. Take care.